In 2024, the Philippine peso has been experiencing a notable depreciation, sparking significant concern and attention both locally and internationally. Despite this, inflation rates have remained remarkably stable, a stark contrast to the previous year. By March 2023, inflation had peaked at 7.6%. Fast forward to 2024, even with the peso's value dropping, averaging around 58 pesos to US dollar, inflation has hovered around a more manageable 3.5%. But why is Philippines peso depreciating? Several factors contribute to the depreciation of the Philippine peso, reflecting a complex interplay of global and domestic influences. In 2024, the global economy has been marked by uncertainties, including geopolitical tensions, fluctuating commodity prices, and varying economic policies among major economies. These global conditions have led to a strengthening of the US dollar as investors seek a safe haven, thereby putting downward pressure on emerging market currencies like the peso. The Philippines has faced persistent trade deficits, importing more than it exports. This imbalance means that more pesos are exchanged for foreign currencies to pay for imports, increasing the supply of pesos in the forex market and leading to its depreciation. In particular, the country's reliance on imported oil and consumer goods has intensified this situation, especially amid rising global oil prices. Capital outflows have also played a role in the peso's depreciation. As global interest rates rise, particularly in the United States, investors tend to withdraw investments from emerging markets to seek higher returns elsewhere. This movement of capital away from the Philippines decreases demand for the peso, further weakening its value. In response to the peso's depreciation, the Philippine government and the Bangko Sentral ng Pilipinas, the country's central bank, have implemented several measures aimed at stabilizing the currency and ensuring economic stability. The BSP has adjusted its monetary policy to curb the peso's decline. This includes increasing interest rates to attract foreign investments and curb capital outflows. Higher interest rates offer better returns on investments denominated in pesos, making them more attractive to foreign investors and thereby increasing demand for the currency. The BSP has also been actively intervening in the foreign exchange market by selling US dollars from its reserves to buy pesos. This intervention helps to support the peso by directly increasing its demand. However, such interventions are typically short-term solutions and need to be managed carefully to avoid depleting foreign exchange reserves. The government is working to boost sectors that can generate foreign exchange, such as exports and tourism. By promoting these sectors, the government aims to increase foreign currency inflows, which can help balance the trade deficit and support the peso. Efforts include improving infrastructure, reducing bureaucratic red tape, and offering incentives to exporters. Despite the peso's depreciation, inflation in the Philippines has remained relatively stable. The Philippine government has implemented various subsidies and price controls on essential goods to shield consumers from price increases. For example, subsidies on fuel and food items help keep these costs down, thereby limiting the overall impact on inflation. Such measures, while potentially straining the government's budget, provide immediate relief to consumers. Improvements in domestic supply chains have also played a role in stabilizing inflation. The government has invested in infrastructure and logistics to ensure the efficient movement of goods across the country. This reduces bottlenecks and helps maintain stable prices for essential commodities despite external pressures. The story of the peso's depreciation underscores the interconnectedness of global and domestic economic forces. Structural reforms aimed at improving the trade balance, boosting foreign investments, and enhancing economic resilience is crucial. Diversifying the economy, investing in human capital, and promoting sustainable development will be key strategies in ensuring the Philippines can navigate the challenges posed by currency depreciation and maintain economic stability. The stability of inflation amidst these challenges highlights the resilience and adaptability of the Philippine economy, offering a beacon of hope and a path forward in turbulent times. Let us know what you think about depreciation of the Philippines peso. Thanks for watching.